that value either 1.1 or 2, depending whether the summa bill in this community or the EB is being updated in their database. Then once you have that number or that value of the property, depending whether you're European or non-European, you will pay on that value 19% non-European and 24% non-European. What happened, Pedro, if I'm renting out the property for a year? Not a problem at all. You'll still need to do the tax return, the 210(4), on a yearly basis, 1 year behind, and you will have to update the information about your investment. So you'll give the reference of your EB, the multiplication, and if you haven't rented it out, then you are supposed to pay a flat tax that pretty much every year will be very similar, and that will be worked out at 19% or 24% on the value of the catastro with the formula I told you. What happened if you're renting it out? Because we've been discussing different webinars, Pedro, about renting it out touristic or renting it out long-term. Well, if you have it long-term, obviously, you need to know that the non-resident tax consists of 2 forms. If you rent it out or if you don't rent it out. If there is a mixture, then you need to do 2 forms every year. And that form, you'll have to include all the income and the days you've rented out and all the expenses, but for those days. The other days, you just need to say what days you have at your disposal. Doesn't mean you living in the property, but you've got it there as an asset. That is taxable, even though it's very little, because for those who do not know, the non-resident tax is not a heavy tax. We could be talking about 200,000 euros property, probably husband and wife and husband, or partners. They will be paying probably an average of maximum 200 euros each on the tax in a possible scenario. Okay, rough scenario. Obviously, again, it's not the same if you're taking for granted the escritura value rather than you take it the tax value. It is allowed and it's possible to use the tax value, Pedro, of the summa bill.
Yeah,
or
because the tax value is where you find it in the council tax, in the EB, what you said. Is that right?
Correct. You will find it. So for every year, what you need to do is provide your advisor, your lawyer, your accountant, the tax bill. So we are sure about the reference, about the updated value. As I said, if the value hasn't been regularized or updated for more than 10 years, then there is a percentage that you will find it in the article. It's just 2% of that value. However, if you are, if that has been updated, then obviously is less percentage. We're talking about 1%. Okay, but this is just for your own perusal. It is not really important because your lawyer will be able how to do it. Now, remember, if you are living in the property or you have it at your disposal, you need to do every year. The good thing of this tax, you have from the 1st of January to the 31st of December in a calendar year, and always you will work out behind, Pedro. So 2024 now, we are doing, and we are still on time, we still have a month to go to do the non-resident tax for last year. If you're renting it out either as touristic or either as long-term rental, as a non-resident, then you need to comply and submit these are the form, which we will do it one from the 1st of January to the 20th of January, and the other is property at your disposal. You've got from the 1st of January to the 31st of December. But the bottom line is you need to submit it every year. What happens if you haven't done it previously? 2 things. tax office could consider you as a tax resident if they have some details, and that might be quite important for you to consider. So it's of your interest to make sure tax office knows that you are a no tax resident. And the other situation that you could have is that, well, on one side, you have the obligation, and the other side, they could take it for granted the wrong information. So the problem you might have is that a tax office could send you letters and say why you didn't submit the non-resident tax before. They could go back, Pedro, up to 4 years here. So it is important for them to know, and the strength of it, Pedro, is that it is important if you are not tax resident to make sure the tax office is registering you as a no taxpayer. Because the other way around, if they even consider you as a tax resident and they have enough evidence to have you tax evidence, it could put you into a different scenario. Now, Pedro, I don't know if it might be worth it I don't know if you're getting questions.
Yeah, only I have just sent some just requirements in order to, well, anyone who may be able to make any question, please do it now. So Ignacio, let's put the I was going to say in Spanish the omelette in the other side. Okay, so in terms, obviously, as a non-resident, is someone has bought a property, has the obligation to declare even though there is no income, just because owning a property and being non-resident, and obviously non-resident for tax purposes. Let's describe briefly what it means to be resident in Spain. What it means, because right now we've been reading, obviously the government has approved the golden visa is going to be eliminated, not just investment on property, also any kind of investment. Right now it's gonna stop on the Senate in order to be amended or approved, or let's see what happens. But many of those who invested in golden through properties in golden visa are not residents, but some of them are residents. I would like you to explain a little bit what means to be resident in Spain, what consequences happens whenever you are resident in Spain, and obviously this situation, obviously with those who obviously bought in according to golden visa or not. I mean, just to make a big difference, a line between residency and tax residency and non-residency.
Right, Pedro, I'm going to try to share now with you guys here another interesting article about taxes in Spain and about obviously income tax as a resident. Okay, so I will be sharing if this works now with you, but let me just see if it works. But I think I'm having internet problems. Can you listen to me, Pedro?
Yeah, absolutely. Yeah.
Right. Okay. Let me just see if internet works well enough, and then I could share it with the audience, because I consider this is quite interesting. Okay, I'm going to share now with you. Now it seems working. I'm going to share it with you now. A nice, interesting article for people, Pedro, to learn taxes in Spain, and then I'm going to just explain the opposite, which is the residency. And here I'm going to share with you now the other format. So now, obviously, Tom, thank you for your question here as well. I will be getting back to you with that. Now, typical scenario, you stay here more than 183 days, because Pedro, remember, 183 days in Spain, dual taxation treaty between most of the international countries, so most of it, not only the UK, USA, and any others, okay? You need to be in a calendar year. Now in Spain, calendar year, 1st of January, 31st of December, every year. How much time back could go, Well, how much time the taxman could go back to review your situation? 4 years, up to 4 years they could go. Now, what happens if by accident you manage to end up into a situation like in the COVID or different situations that you are more than 183 days? Well, again, this is what the law states. A different thing is whether the tax office is going to find it out. How could they find it out? Well, somebody tell him, having information through, for example, through, they have a lot of fountains of information. But for example, the basic ones, utility bills, they might think you're living in the property if there is a high consume on electricity, water, etc. There is a presumption that there is somebody living there and you are living in the property and they don't have any knowledge that is being rented out. So they presume you're living there. Now, again, what is the exchange of information that the countries have with Spain? That really depends on the treaties they have. For example, UK and Spain, they're quite talking, you know, they're quite active. However, United States, I haven't seen being that proactive talking, right? So, so this is something. So, Pedro, the first thing I will say to people: first, have you spent more than 183 days? 2, what nationality you are from? 3, what kind of evidence you've left if by accident you spend more than 183 days? 4, what are your intentions to stay in the country? Is it just an accident, or is it just going to go every year like that? Now, this is like driving on the road and having the guardia. How many chances are to be stopped by a guardia? Where is a percentage? Sometimes you're speeding and there is nobody there. Well, this is exactly it. How are they going to find out? Actually, Pedro, I did find out with clients, through clients, that they have received letters, funny letters from the taxman asking questions because they didn't submit the tax return as a resident. Please confirm what your tax regime or tax situation. Obviously, again, do you have residencia, Pedro? Yes, I do. Okay, well, there is a presumption, there is a hint. Do you have water, utility bills, property, a residencia? That's, I would say this is kind of a bomb, or, you know, it could be a bomb because you're giving information that you are living here. Then if you have family living here as well, there is a presumption that you, obviously, again, you could contest any letter and provide evidence to prove the opposite. So even though if the taxman sends you a letter, it doesn't mean they've got the details right. So now, if you're saying for more, I mean, I always recommend to do tax planning. Why? Because there is a way to control and know the rules, and then you could act accordingly. Because at the end of the day, everybody's free to do whatever they like for their own purposes. So if I want to stay longer in Spain, why not? But what are the tax consequences? So the planning is very, very useful and very, very, is worth it because we're talking about knowing the law and the consequences. Now, if I always recommend, if it's the first time you're doing the non-tax resident, that's fine. That wouldn't be a problem, especially people who managed to start getting the golden visa this year or the non-lucrative visa after the 1st of July. So that's another presumption. When do you get your visa? That will be another question, Pedro. Would you get this visa? I got it in January, and then you have all these evidence that you've been living here. Have you registered with the tax office? Are you in the padron? Utility bills, etc., etc. So now the rules are completely different. For non-residents, they will be taxed according to the property value and the amount of properties. I didn't mention that is one per person. So if you partners, husband and wife to husband, are buying a property, you bought a property 50% in one and 50%, you have the obligation to submit it per person per year, okay, per property as well. Okay, so that's quite important for you to know. What are the consequences if you sell? That's another good question, Pedro. We are getting. It's not the same as a resident than non-resident. It's not the same that is your main property that is not your main property.
Mhm.
So in general terms, for those of you who are listening are non-residents, you will lose out the 3% retainer of the selling value, 3% that you will have to claim that money back if you are due on a rebate. So you've got after the sale 3 months to submit your tax return plus one, and then work out the capital gain tax. Okay, it was 0, then you're due to get the 3% back. It was more, so you will need to pay 19%, Pedro, from the net value, which means income minus expenses. And it doesn't matter European and non-European. Unfortunately, Pedro, and I think this will be one day kicked out through the courts eventually, the unfairness situation about non-resident tax for European and for non-European, 19% and 24%. I
And
think
some rights for the Europeans that do not have the non-European residents.
correct.
Including some expenses.
Correct. So for those who are non-European, the problem is a tax on 24% from the gross figure. So I probably recommend you to deal with the tenant and try to have as many invoices in their name, because that's not deductible. So they could pay their water, they could pay their electricity, they could pay a lot of things. You'll be taxed on the gross figure, 24%, non-European. Now, however, European, it is income minus expenses, and the net figure is 19%. Okay, so that makes Pedro investment a bit different, doesn't it? Because it might be attractive and might not be that attractive. I don't know, Pedro. I don't want to be too tough on talking and saying too much. I don't know whether you want to clarify anything I've said, if it's clear enough, or shall we start now with the questions and answers that we're getting a lot of them?
Let's go through. Let's move a little bit for questions and answers, just to start touching those questions as we are starting to have some of them. And then we'll go back to maybe to the touristy rentals, which is right now having a lot of questions in terms of some announcement by the government. But okay, let's go for. I'm watching Marianne. I says has a house owner. She's a house owner in Lathenia. Owns a limited company in Ireland and have a green card and is Spanish, and will spend 6 to 9 months in Spain. Question is what tax implications that she has in Spain, and should she stay as a non-resident? A property owner, Lathenia, owns a company in Dublin and has a green card. I mean, obviously, and Spanish will be spending more than 180 days. And what will be the consequences as this time as a resident and obviously as a tax resident? Hello, Ignacio.
I couldn't hear you very well, Pedro. Sorry, say it again.
No, I mean, the question is from Marianne. Obviously, Marianne is she's gonna be resident in Spain. She's gonna spend more than 6 months in Spain. She will be resident in Spain. So in terms of owning a property, it's as a residency situation. Do not have to make as a non-resident, obviously. Do not have this declaration. Will be part of a home as a permanent home in Spain. So any declaration of income she may have as a resident in Spain will be, the property will be included as a resident and permanent home. And so will not have any input in order to be paid because of that. It will be as you do whenever you are non-resident. Because this is also the case, whenever you are non-resident and you input, even though you don't get any income, as a resident, you own not more than one property, or the properties that you don't live as a permanent home also has some small tax or a small base to be taxed, to be included in the declaration. So, and Marian, what she says is that she owns, she's got her own business, a
limited company, yeah.
Well, maybe is worth it to say, well, I will stay less than 6 months, I will stay more than 6 months, because Ignacio, it's a question that is being made a lot. It is not an option.
It's not an option.
Criteria, the general criteria is, I mean, you stay more than 183 days, then you are a resident, you're a tax resident, is that right?
Yeah, and that's a very good question, Marian. And actually, I don't know if you could scroll all the way up, but I'm going to just share it with you. I don't know if you could just log into the chat and go a little bit higher. You will see an article about taxes in Spain and income tax return. Now, Marian, if you have spent more than 6 or to 9 months, even though you have a limited company, the question is, who's earning the money? You are having a salary from Spain, more than 183 days, then you need to pay income tax return here in Spain. Different thing is whether the company is making money and is not distributing money. So it's not distributing anything to you. Therefore, you will be a resident, but tax-free because you don't have any income. But if it is what it is, which you mentioned here, that you have a limited company and then you have a salary and you are here more than 183 days, Pedro, she will have to pay taxes in Spain. And it's not an option. Different thing is whether they're going to find it out or not. That there is a different way around to do it. I don't know whether the bank, you did register in the bank as a resident, because that's another thing, Pedro, I forgot to mention. If you have residencia, you inform your bank that you're a resident, the bank will tell the tax office that you're a tax resident. So I think I'm clear with that, Pedro. The situation, you might say, Ignacio, I'm working remotely, but I work from the UK or from the US or from abroad. I'm getting my salary here and I live more than 183 days. Well, I will double check with the treaty if there is any exception to your specific situation. But I could tell you general, as today we're talking about general, that in general terms, more than 183 days, you must do your tax return in Spain. If you still need to do it from abroad, you could do the dual taxation treaty. You will never pay double, but you'll have to declare it both countries. One, you will pay the tax where you're resident, and you will offset from the other country. For example, Americans, they always do combining, because if you're a national of the United States, you must do the income tax return and deduct whatever you paid abroad as a resident. I hope it's clear, Pedro.
Okay. I don't know, I mean, just to add, I don't know if it's been said, Ignacio, I was reading some questions. Obviously, if Marianne, she receives a payment, a salary from the Dublin company, and she stays as a resident in Spain, obviously that she will have to declare that income. At the end, whenever you are resident in Spain, you have to declare your worldwide income according to the double taxation treaties. Obviously, it needs to be checked, the double taxation treaty between Spain and Ireland, or between the UK, between Spain and any country. And in most of the cases, I would say in this case, you stay here in Spain, you work here remotely, for example, and then you declare your worldwide income, in this case, your salary or your income or your self-employment, you declare it in Spain. Let's go through another question. It's been made by Sharon.
I think there is one, Pedro, from Brian. I don't know if you run through the one from Brian.
No. I mean, let me just find it. Let me just take it.
It's 552.
Okay, just read it, please.
All right. I'm not a tax resident and rent out my Alicante apartment full time. Normally, I file Modelo 210 quarterly. Do I now file Modelo 210 annually, beginning January 2025 for 2024 rental income, Pedro?
Yeah, I mean, he rents the property during this year 2024. Obviously, he will have to declare in January 2025 in one file and one application form. Yeah, that's right.
That's been changed. The law has changed here, Brian, from January 2024. So that means you don't need to do quarterly any longer. You need to do, if you rent out the whole year, there is one form you have to do from January to December of the following year. But if you're renting it out 1st of January to the 20th of January, you need to file the last year income from rental and the days. So income, expenses, days, and then you file only once a year. Okay, so now everything is once a year, Brian. Okay, Pedro, please.
Okay, let's go through another question. Is from Sharon. That's right. If we are not yet at a 5-year point where we will be applying for permanent residency and have a year where we have not been in Spain for 180 days, are we subject to Spanish taxes for a year? We own a property in Spain or Golden Visa, and we are citizens in the US. We are citizens of the US. Sorry. So. We have some examples from some clients that they may say, okay, well, we've been spending some years in Spain. Normally it's more than 2 years, and I will explain like this. And then I have to get a lump sum of money. I have to sell my property in the US, in this case, or in the UK, for example, or in other country. And then obviously there's going to be a big capital gain. And obviously in Spain, capital gains, in this case, when you sell this property in the US, or it goes from 19% to 28%. It is on a scale from 0 to 6,000, from 6,000 to 50,000, 50,000. Well, it's on a scale from 19% to 28%. So sometimes could be a big amount of money. Sometimes people have some situation where they may want to move because the capital gain is too big, and for some reasons they don't want to. I mean, they won't planify to pay taxes. Sometimes they have to move around the countries, and well, because of personal circumstances. Okay, that's good.
Pedro, I think I don't know if you're going through Sharon's question, but I think it's quite interesting.
Yeah, I'm right now answering that. So,
okay.
In those terms, in where obviously you are really restricted on that you are really tax resident. You are resident in the US. You are tax resident in the US. You may get a certification from tax office in terms of you are, even though you've been resident in Spain, now you are residents in the US, and you fulfill the requirements to be resident and tax resident in the US. That's extremely important when our clients or potential clients that can come to our office because they have an inspection by tax inspector in Spain. One of the powerful documents is to show and prove and that you are tax resident in a different country. You are tax resident in a different country, then you are not tax resident in Spain. Obviously, this may have some loops in terms of, well, maybe you've been living in Spain more than 183 days. Or maybe you're not. Maybe you have lived less than 183 days in Spain, but you are not tax resident anywhere. So at the end, you are tax resident in Spain because maybe your vital economic center are in Spain. Or there are some other criteria, but in this case, Sharon, obviously, as much as you plan and as much as you prove, obviously, that you've been living and you are resident and you are fully resident and tax resident in the US that year, then will be combined. Even though you have a property in Spain, you will be treated, and we can speak about that in a private appointment. You will be treated as a non-resident for tax purposes. We have some appointments like that, and sometimes people come to Spain after 2 years. Maybe if you are only 65, after 2 years, they sell some properties and they think that they don't have to pay any taxes. Well, there are some situations that have some exemptions or benefits on this. But it's good to plan, obviously, in a way that, okay, if I'm gonna move, I'm not gonna live in Spain more than 193 days, let's say in 2025, or maybe this year, 2024. Well, whatever you do, obviously, powerful is about a tax resident certification. But also, where do you live? You live in a place that is available, is rented out for a long-term contract. You have a property in the US. These are obviously bills that you may pay because you are consuming electricity, water, bank statements. Those proof will be able to subject to show to the taxman in Spain, saying, okay, well, I'm really resident in the US. I'm paying taxes in the US. I am taxed because this is a certification according to the double taxation treaty. Because, for example, maybe those years you were not in Spain, you were in Spain, sorry, and that specific year, for some reasons, you were not in Spain. But But it's a very interesting question because it happens sometimes. Actually, it's a question as I said at the beginning, whenever you're going to get a really big capital gain, obviously it's something to think about. Okay, let's move to...
But I think is a good option, Pedro. I think is,
Yeah.
I mean, since you always have the freedom of movement in this way, then if you could always do tax planning, and the rule of 183 days is crucial. So Sharon, I think this is a good option, and but you need to do planning, proper planning.
Proof documented to prove that is because I mean Ignacio and myself we are lawyers, we are barristers, and obviously we deal with and we fight against tax office in many cases, and obviously it's something that we need to show and prove documents in order to prove that you are really resident in the US and tax resident in the US. Okay, let's move on. Ignacio, I mean,
I think probably John.
Okay, John. John says, does Pellicer Heredia provide tax preparation and filing services? If so, how much is this, Ignacio?
Okay, John, yes, we do. We've got Guillermo and Marta here online as well, our accountants. We do file for a lot of clients, residents and non-resident. We still do tax planning on a video conference or personal. Yes, that's not a problem. Now, with regards to the price, how much would it be? I need to have more information, whether it's one property, two people, two properties, whether it's non-resident, whether it's resident, what country you are contacting us from, what kind of income in general, complexity. So it's an hourly rate at the end of the day, John. So depending on complexity, but if you give us a bit more information, we could confirm the price for an annual non-resident tax. And yes, we could do an estimated tax obligation. And I mean, if you're saying, John, how much will you charge us to do a video conference with a simulation, being either Marta, Guillermo, and ourselves? We will need the information prior to it, and probably we'll need to do different simulations. If you need to work out simulation about income tax as a resident, as a non-resident, wealth tax, etc. We normally charge for that service €250 plus VAT.
Okay, let's move on. That's having a lot of questions. Ignacio, this might be off the topic, but if you properties in Andalusia, does one need to pay the wealth tax if you become a tax resident in Spain? No, I mean, there is no wealth tax. Only if the property is over 3.7 million euros, because we have in Spain, not just in Andalusia, in all of Spain, it's called solidarity tax. And it's individually, and it's from 3.7 million euros. So Andalusia is one of the regions, as Madrid, and we hope in the future, we were expecting that this year was going to be eliminated for next year, wealth tax also in Valencia region. We don't know if it's going to happen because of this situation that we have right now because of the floods. But obviously, in this case, there is no wealth tax.
Pedro, there is for residents or non-resident. He's talking about residents, yeah.
Yeah, I mean if you become tax resident in Spain, it says it.
Right. Okay. Yeah. Andalusia, Madrid, Balearic, I think at the moment are the more efficient so far, but you never know. The law might change. They said the community Valenciana just did promise that they will remove it. I still haven't seen that happening. I hope it happens. But anyway, and again, sometimes you will go to a place where the tax is favorable and then they change the law. So you never know. The tax are quite proactive and active. So, Rafael, I think that answer to your question. Okay, Pedro, let's move on so we can just answer all.
Okay, and if I have, I think it's 1808, if I have income in Spain office rental income? Can I declare in Spain the rental income and do not declare it in my home country? Normally it's not that way. Normally, obviously, according to the double taxation treaties, and in the rental that you have as a non-resident, then you have to, well, as a resident in this case in Spain, and you have a property interest outside, that I presume that is the case, and the income that you're getting from that property, firstly, you will pay income tax for that property as a non-resident in your home country, and then we will deduct it in Spain. So it's not just to declare it in Spain. I mean, you are resident in Spain, imagine that you have to pay, let's say, 1,000 euros in tax in your home country, and in Spain it's 1,500 euros, then will be 1,500 euros minus 1,000 euros, then will be 500 euros tax, as an example. So normally with all, I would say, I mean, most of the convention between Spain and some countries, and this is very standard in all the countries, all the double taxation treaties, income that you get from property is paid according to the taxes according to the country where the property is, and then if you are a resident in a different country, so you have to declare your worldwide income, you declare that income minus the taxes that you have paid in that country. Okay.
Pedro, I just would like to add something what I think is quite interesting. For those of you who are residents, so far the Spanish tax system gives a lot of incentive to those who rent out the property. I don't know if Pedro, we did mention this.
Yeah, no, we didn't mention about the long term. You mean
the long term as a resident?
A resident.
Mention that as well, yeah.
No, we didn't mention. Say it. I think it's important. Yeah.
Sorry. So, if for those, I know most of the people here will be non-resident, but in case you are turning out resident, if you're renting out a property, 60% of the net is tax-free. In general terms, so income minus expensive, the net figure is only taxable. The 60% of the net figure is taxable at your marginal rate. Again, in the chat, I did mention the sliding scale as residents for you to know. Okay, so I think this is important, Pedro, for people to know. And I don't know if you run through, Pedro, the one from Tom about avoiding capital gain tax.
Let me just read the question.
The problem, Tom, avoiding capital gain tax is quite hard because you're going to be retained as a non-resident, always 3%. Even though you're selling your property as that is being held on a company or individual, you will still, even though you are abroad, a company, an international company, that is taxable in Spain, and they will retain a non-resident company will still lose out 3% as part of possible capital gain tax. I think it's very much worth it.
Yeah. It's a good question, but obviously, technically, he should declare, obviously, if it's like we call it patrimonial or sociedad patrimonial, which is a company that owns a property, and that property gets maybe some rental, some investments, in the future sell it. It should be declared. Not the 3% obviously is an obligation whenever you sell, is retained by the buyer. But obviously, if it's a capital gain and it's more than 3% at the end, covering the net amount, obviously, should be paid the extra amount in case is technically should be done that way. Obviously, if you, I mean, and this is not correct, and this is something that I wouldn't recommend. Obviously, if you sell the shares in Delaware, that's a different issue. Obviously, you should be paying taxes. I mean, this is our recommendation.
But Pedro, if you're selling shares, if you're selling the shares in Delaware and you are a no tax resident.
Yeah, at the end is something that technically must be paid in Spain, those taxes. Obviously, tax office will not have any grounds in order to see it. It's impossible, I would say, in this case, from this kind of company on that kind of territory. But obviously, technically, it's something that theoretically, and obviously from us as a professional advice is to do it correctly and pay taxes.
Mm-hmm. Right. Just remember, as a recap, Non-resident tax will always lose out in Spain 3%, but only if the sale is here in Spain. Obviously, otherwise you're not being retained. Okay, a different thing is whether you are doing, but I always recommend to do tax planning. I was yesterday with some clients trying to do simulation about donations, inheritance tax planning, options about what is the real value, donation value, inheritance value. And I really think is the best thing you could ever do is about doing planning, is peace of mind, is always cheaper, and is always best. So for those who are having...
At the end, Ignacio, the client knows what is going to be the scenario whenever they move into Spain. Is that right? I think it's a question by John. I mean, can you do an estimate tax obligation, an estimate fee based on summary of relevant info? This is the planning.
I think we did answer to this one because John did ask how much was our fees, and yes, I did answer yes. We can do estimated tax obligation based on the summary of relevant, John. So what I need you to do, provide us with a summary of your scenario, provide us rough figures if you want about all the general income and what is your points of concern. So do you want me to look through possible income tax scenario, wealth tax scenario, non-resident tax, and we could do that. The more information you provide us prior to the appointment, the better, because we'll have the answer and we could do all these planning. So this is good. Okay, let's move on, Pedro.
Okay, let's move on. I mean, there's a question by Peter. It says, our income and capital gains from non-taxable US retirement accounts, IRA, considered taxable income in Spain for Spanish tax residents. We have a lot of clients from the US and residents in Spain, and we are receiving a lot more clients from US being residents in Spain. So Ignacio, it's considered IRA. I mean, it's a traditional IRA. I understand it's a US retirement account. It's considered whenever is received by clients, residents as an income.
Mm-hmm. Pedro, I think it is the 610 question, or I lost you here.
That is
it's about
1818.
Okay. From non-taxable US. So this is from an IRA, but the IRA is taxed in Spain as a pension, Pedro.
That's right.
Is that the question that he's making? Yeah, income and capital gains and non-taxable US retirement account, IRA. Yes, if you will be a tax resident in Spain, Peter, this will be taxable in Spain, and you will ask for an extension in the US, and then you will comply and provide the tax resident information about your tax payment here, and it will be deducted in the US. Remember, there is some allowances. For example, in the UK, withdrawing from investment, 25%, I think it is tax-free. A lot of financial advisors say, well, this is tax-free, but it is tax-free in the UK, not in Spain. So for those who want to cash in investment or retirement, if it's cheaper to do in your home country, do planning, do it before you come over to Spain, and be more efficient with that. Okay, so
let me just add to Peter. Obviously, in that retirement account, if it's a gain, and obviously you don't withdraw anything, you don't pay taxes. I mean, you pay whenever you withdraw, whatever you get. Okay, and that would be part of or considered as an income, but it's not considered as an income in the account if you get some gains. Okay.
Pedro, let's move on. I think we have more questions. I think we missed from Richard, didn't we? He will be resident in 2025. Come from the Treasury bond during that year. Do you run through this one?
Yes, well, go ahead. Let's read it.
Yeah, I don't know if Guillermo could just look at Richard's and Marta.
Okay, I gotta find it.
I'm not sure. I'm not sure if you run through it because it's hard to follow. Everybody's here.
I'm a US citizen and will be a Spanish tax resident in 2025. I will
Oh,
receive.
here we go. Yes, yes. All the withdrawal, Richard, will be, yeah, I understand what you're saying. All the withdrawals, even though, I mean, for you to understand, everything that you're withdrawing from interest, from dividends, etc., will be taxed in Spain, minus, obviously, you'll pay the tax here and it will be deducted in the US. Again, if it's more efficient to do a different way around while you are a tax resident in the US, we're still on time. So I really think we're still on time to do a lot of tax planning because we still have 1 month still to go to the end of the year. And you can still react if you're a not taxpayer, but you will be a taxpayer next year. And it's cheaper to do it this way from the US than do it now before the 31st of December. And this is good advice. Okay, but always compare how much it costs you in this country, how much in that one, and then you do planning. Okay. Right, Pedro, where are we at? I think is Marion. Marion is making another question. Yeah. What benefits?
Benefits is there for me being resident tax compliant or non-tax resident compliant. I am unsure which is better for me as a homeowner. If I was to sell my Spanish property, I am open to both options. And this is what says.
Right. Okay, Marion, as I said to you, the most important thing for us to be able to give you accurate advice and you make a decision is you give us the exact details of your possible tax scenario. For example, as a resident, how much income, Marion, you're going to earn? I need all these figures. Then I could give you a rough idea. The other way around, for example, non-resident tax, give me the tax bill, and then we can say as non-tax resident. Now, again, if you sell the property as a non-tax resident, 3% you'll lose out. Then I need purchase value and selling value and expenses. If the net is negative, you're due to a rebate of the 3% or whatever is applicable. That's as a non-resident. As a resident, then I need to know your income. If you have zero income, or you can make it happen like zero income and live on savings, then it's tax-free because no income or income from work less than 15,000 euros in general terms it doesn't reach the sliding scale. Okay, you're obliged to submit it probably when you go after 15, but you're in the limit. It's not an allowance, it is that you will not be taxed. So remember, income from work, more than 15,000 euros per person will be taxed. It's not an allowance, but you will pay tax, okay? Now, however, non-resident tax, then doing the work, probably not working, you will be retained the 3%, and we can work out capital gain tax as a no-tax resident. Okay, right. So remember, as a summary for you guys. Sorry, Pedro. Yeah.
Just summarize, please, Ignacio.
As a summarize, I know it's complex. I encourage you to go into our website, go in English version, what we do, taxes in Spain, and just read a little bit about questions and answers that we make and the videos we have. Obviously, there is more webinars that we recorded just in case it brings you light, because this webinar is going to be recorded and you can watch back from tomorrow in a website, okay? But just to do a summary, remember, 183 days in Spain, in a calendar year, it is the rule. And from there, you could do tax planning. My recommendation, Pedro's recommendation, the company recommendation, do tax planning. So you have accurate figures. You don't have Bob in the bar telling you, oh, I pay more, and because people sometimes compare without knowing the specific, and it is impossible to know. So what you need to do is a simulation. How about this? How about that? And then you will see the profit that you will make with the decision that you end up making.
That's right. Thank you, Ignacio. Thank you, everyone. Obviously, as has been said by Ignacio, we will have this webinar recorded and will be on our website from tomorrow. Please feel free to contact us. I have included in the chat our email, Ignacio and myself email. In order to, you have any question, you want to have an appointment, a video conference, whatever is needed, any question you may have, we probably have not answered. There are some other questions that we couldn't answer because of the time. And again, as a recommendation is make a planning, check what is your scenario and get proper advice on what taxes should be paid and why, and obviously explain which is your specific scenario on this. Thank you very much, everyone, and hopefully we'll see you next week. We have a very special topic, a very urgent topic about the golden visa, because it's going to be rejected and eliminated, and will be, I understand, will be a very also good webinar. Thank you very much.
Okay.
And have a nice day.
Thank you, Pedro. Thank you. Thank you. Goodbye.
Trust is vital when you're in another country. If you want to buy a home, set up business relationships, or apply for a residence permit, you need to be able to count on the best independent legal aid. Pellicer and Heredia is an international firm of lawyers with over 20 years' experience and one single aim: for you to live at ease in Spain. In order to give you a clear, streamlined, and fast response, we work with a cross-disciplinary team of professionals specializing in the main legal fields: civil law, foreigners' affairs, business law, tax and financial law, and international law. And to ensure that you're kept informed and up to date with everything, we have 6 offices on the Eastern Coast. Whether you're from here or abroad, we will always stand by you and speak your language. Our relationship is based on openness, professionalism, and a commitment to finding legal solutions in your best interests and for your peace of mind. Pellicer and Heredia, international lawyers.